The earthquake relief of small and medium-sized enterprises. Just as Wenchuan experienced a natural 8-magnitude earthquake, domestic small and medium-sized enterprises are also experiencing a super-strong earthquake. The wave of small and medium-sized enterprise bankruptcy in Zhejiang and Guangdong has been quite tragic. The big test of life and death for enterprises comes from the sky. The era of enjoying the opportunity of prosperity, wealth and nobility in the 30 years before reform is over. No return. The small and medium-sized enterprise community facing disasters is filled with panic. Some companies find it difficult to accept such cruelty, blindly blaming the government and blaming current events. This disguised way of inaction ultimately leads to self-blame and self-pity and even self-destruction. As is well known, the survival environment of private enterprises has always been far inferior to that of state-owned and foreign enterprises. In the Chinese corporate world, which is divided into 3 parts, state-owned enterprises born with red roots and seedlings are rightfully enjoying policy protection and gaining competitive advantages through monopolistic resources. Even so, against the backdrop of severe environment, Lu Yili, the director of SASAC, also seriously warned the 150 central enterprises under SASAC to be ready to tighten up for at least 2 years. Foreign enterprises not only have rich experience and strong strength, but also enjoy various policy preferences from the beginning. In contrast, private enterprises born in the wilderness, state-owned enterprises, and foreign enterprises were not running together at the beginning. However, as representatives of market forces, now only market mechanisms can be relied on. Therefore, it is urgent for small and medium-sized enterprises that lack external protection to carry out earthquake relief on their own. In reality, in practice, enterprises can through in 3 directions: vertical, horizontal, and oblique. Horizontal refers to expanding or transferring to low-cost areas as a whole. Vertically, it involves transformation and upgrading, developing from the low end of the industrial chain to the mid to high end, and from low to high added value. Oblique action refers to advancing from the industrial operation field to the capital and
of surplus liquidation. Therefore, this requires innovation in trading methods to adapt to the development of derivatives. In fact, the financial crisis is causing the global financial market to fall into painful reflection, making the United States and other countries, including the United States, face the challenge of the Washington Consensus. Although the major countries in the world have coordinated their actions to cut interest rates and inject capital, it is not difficult to imagine that after the crisis, the opening of the financial field of all countries will be cautious and explore the development path of the virtual financial market for the battlefield. In the short term, financial civilization has stagnated, but in the long run, with the recovery of investment banks, confusion between governments and financial institutions, especially the weakening of Wall Street's financial power center, which once dominated the game rules, and a decrease in trust, the international financial derivatives market will eventually become a large casino with relatively open and fair rules, where countries or institutions gamble for high profits. The financial derivatives market is moving towards casino-like, serving as a safe screen for the virtual economy to directly affect the real economy obstacle, adjusting economic imbalances before they harm the real economy, becoming a place for excess evaporation with dissipative functions. But this is only a possible trend in the international financial market, and whether domestic derivatives in China are heading towards casinos, the key to success lies in whether, while accepting the double-edged sword effect and abstract affirmation of financial derivatives, we can leverage the advantages of latecommerce, absorb and learn from them, and improve the barrier role of the virtual financial market. This first means separating rather than mixing. Of course, this is not to say that banks, securities, and insurance are completely in their respective positions and functions, but to set up firewalls to separate high leverage off-balance sheet banking and financial derivative investment business from traditional banking business, in order to ensure the bottom line of deposit safety. In addition, a firewall is set between market failure and human greed. For example, the income of the boss is no longer just the final say decision of the market. Next, improve the order of the casino, ensure fair, just, and open trading rules and information, so that participants can be willing to gamble and admit defeat.
Financial capital. Industrial capital is just a starting point, and it should obtain higher investment returns if it bears huge leverage financing risks. On the other hand, industrial capital believes that financial capital is just a booster for its development, and it is not cost-effective to work for others when busy. In this situation, industrial capital and financial capital inevitably compete with each other, constraining each other's development space. As for China, due to the imperfect financial market, the newly established financial capital actually does not have the strength to truly compete with industrial capital. Taking the circulation of restricted shares in the current capital market as an example, the industrial capital represented by untraded shares, non-representatives, is undoubtedly more advantageous than the financial capital. The lower holding cost and the absolute controlling position make the large shareholders extremely willing to cash out, forming an arbitrage space from industrial capital to financial capital. From this perspective, it is also doomed that the PE market has not been fully developed. That is, the expression of bull to bear. Therefore, whether from the perspective of economic structure, institutional environmental conditions, or from the perspective of micro-attitudes and understanding, the main wave of PE investment has not actually arrived. Firstly, only when financial capital obtains a relatively symmetrical position in the game with industrial capital can the function of financial capital in improving financing and integration efficiency be greatly exerted, and PE has space to usher in a true spring. However, it is not difficult to see from the recent issuance and listing of China Construction Corporation that the role of financial capital in serving industrial capital is still difficult to change. See reference information for details. In addition, capital attributes determine investment philosophy. When long-term funds such as social security funds and insurance funds can join, Chinese PE investors and managers will become more rational and play an increasingly important role. Correspondingly, industry returns will return to normal levels. Blackstone Group's average annual asset growth rate in the past few years has been around 40%. From this perspective, At a time when PE has not yet fully developed and is turning from bull to bear, the investment of enterprises is highly likely to present the following three aspects. General trend. Firstly, if the future situation is uncle, the instinctive reaction is to lie down on the spot and rather freeze the money. These companies may lock in profits through early repayment of loans and other means. But this also means that they are